Hey guys, welcome to the show. Today we're going to talk about just some new things that have happened in the 2025 year that going forward are going to be permanent changes to the way we do business. Lending doesn't change a whole lot over the seasons. It's usually, the guidelines are pretty much flat or stay the same, but some big ones this year. We're going to start with the non-permanent resident aliens. Now they can't go FHA. This was huge. They stopped doing this in about May. There was just a huge rush of people that were not able to qualify on conventional, but could qualify on FHA that didn't have citizenship here and that didn't have a green card and just did anything they could to close on a property before the time elapsed to be able to do that. I had somebody really have to move their butts last year and close in the month of May. But basically, don't get mad at the government for this. What they're basically saying is, if you want to qualify for a loan, you can still qualify for one conventional. The FHA loans are riskier loans for FHA to produce, and the delinquency rates, the fall through on those, foreclosures, all the bad statistics, those are higher on the FHA loan. So they want you to have more skin in the game here to be able to get one of those loans. Number two, for Fannie Mae, the amount of cash back allowed on all limited cash out refinance transactions has been revised. The amount of cash back provided directly to the borrower may not exceed the greater of 1% of the unpaid balance of the new loan or $2,000. So that's new. That's basically just not going to let you go overboard on getting a little bit of cash back on a refi. Sometimes we set the loan balances to be a little higher to cover the old balance and any closing costs, and just to make sure it doesn't get too high. There's not too much of a gap there. This rule is being put in place. And then let's see, we've got Freddie Mac made a change for 2 to 4 unit properties. The maximum loan to value or combined loan to value will increase to 95% for purchase and no cash out refi transactions secured by a 2 to 4 unit primary residence. So this increase is not applicable for high balance loans. It's going to be the same limit there on a conventional loan, the 832K. And then loan limits, they change every year. You can do, in most of the big counties that I do business in DC, Maryland, Virginia, talking Fairfax, Loudoun, Montgomery, DC, Prince George's, the big boys there, Prince William. You can do 3% down conventional on a loan of up to $832,750. And then you can do 5% down conventional for a loan of up to $1,249,125. And then FHA in those big counties, you can do 3.5% down FHA up to that basically almost $1.25 million mark. So you can buy at 3% down in the DMV on a lot of houses of up to like a $860K based on that number. And then 5% down, you can basically buy a home for $1.3 million and, get a loan for 5% down. It's crazy. Not that happens often, but just in case you want to. And then above those limits, you got to find a jumbo loan. And then in Texas, you can do 3% down up to $832,750 now. All these loan limits, they only came up marginally by maybe a couple percent. So it wasn't the raise that usually we see. Usually, recently we've been seeing loan limits raised by a larger amount percentage-wise from one year to the next. So this year's changes weren't that huge. And then, Texas, so all counties all across the state there, they use that same loan limit. They don't have the high balance, the larger limit where you can do 5% down on a larger loan amount. In Texas, everybody just uses the same baseline, even if it's a rural county or a big city county like Travis or Hayes or Williamson, the ones that I do business in mostly. And then in those counties right now, still the loan limit for an FHA loan is $571,550. So you can do 3.5% down up to that. And then anything above those numbers, you got to go jumbo. Yeah, those are the main changes this year. Not huge, besides for really that non-permanent visa, non-permanent resident status can't go FHA now. So it's been harder for those people to qualify. They got to get their credit up. They got to make more savings, maybe store more away to help the algorithm give them an approval decision when they're trying to get a loan approval on a Fannie Mae or Freddie Mac mortgage now. So they've got to tighten up their finances to be able to do this now. But guys, if you haven't seen my first time buyer playlist, highly recommend you go there. If you haven't started anywhere yet, if you don't know what to do, if you don't know where to start, it's going to tell you everything I'd want to know if I didn't know anything about a mortgage. But thanks for watching, guys, and I'll see you on the next one. Take care.